What's going on, everyone? Friendly neighborhood wave man back at it again. But about a bunch of bullshit. So what I'm gonna be trying to do in this, I'm gonna try and keep the video pretty short. I want to start doing like weekly overviews, like what I expect is gonna happen, going into the week, so we can kind of have a roadmap and base what happens off of what's going on. Cool if it does. If it doesn't, whatever. We can always go back and reevaluate. So let's pull up my current count. Try not to have an aneurysm. I know it's a bit much, but here's why I'm super excited going into this week. So obviously we had our January run. This is, there are a bunch of different ways to interpret the degree. For the sake of simplicity, we'll just call this a cycle. So you have cycle, primary degree, and then your intermediate within primary within cycle. Fractal trading. Oh, it's a good IPA. Okay, so here's why I'm jacked. Oh, so jacked. So last time, I'm going to be basing this video off of what happened in May and June. Our run from 136 up until this is what, 344? Yeah. Here's why I think we're due for that again. And, we've seen so many "you are here" posts, cycles kicking up again. And I think it is. And so does everyone else. But here's like my hot take on it, right? So if we're looking back at this cycle here, we had our 1-2 up, and then another 1-2 here within the cycle degree. What's interesting is if we come down here and we're looking at, so after we bottomed down, this is right after earnings in March, then we had a run up the next day, followed by like a bunch of, sideways bullshit. It was boring. I wouldn't say, I don't think painful is the right way to describe it. Just boring, like nonsense, just nothing, right? But here's why I think this is where it gets interesting, right? So we come down here and we form a high, and then we come down and we form another low. And what we're going to be doing now is we're actually looking at this degree right here, like within, this should be a 2. I don't know why it's not. Let's add another letter there, right? So we're looking down. As soon as we form this low, we have our sideways, we have a bunch of sideways shit. But if you look here, right, the low that we form, this could be classified as another 1-2, right? You have a move up and a move down, but it stays above the previous low. Not by much, mind you. This is 136 and we bottomed 131, 132. So negligible, but it's there. And obviously, we bottomed there. And as soon as we form this low, this higher low relative to the previous low right here, right? You form this low and we started to uptrend a bit of sideways, and then boom, we take off. So, from like an Elliott wave standpoint, I guess you could argue 1-2, 1-2, 1-2. A lot of 1-2s. I'm probably going to be saying that a lot in this little recap. But, as soon as that higher low was in, after this low, you had to move up, right? And we come back down, higher low. And as soon as that low is in, you start to move up, and we're, the trend is bullish again. And, and so now we're going to look at basically the same positioning just a few months later. Except this time, it's lined up to be even more explosive. And here's why I think that's going to happen. So, move up, 1-2, 1-2, and then another 1-2 right here. This whole move from the March low up to the June high, I'm interpreting it as a wave 1 within this red degree right here. And we can say that because this wave 1 right here, barely below the recent high, but below. So the move is still within this wave right here. Then we come down and our low at 147-ish, higher than 115, or where we bottom, 113. Yeah, higher, obviously. Then we zoom in more, and again, right, we have our move up and our move down, but here's our higher low. And on Friday, this is when we started to move up again. And I mean, if we look at it on a much smaller scale, we can actually like analyze and try to see if we could draw or anticipate a low down here. So looking at this, I see it as A down, or so we have 1, 2, 3 down. I see this as like as a flat here. If we look at like I don't know if the 5 will show it. So you have 3, 3, 5, right? So this is a regular flat, 3 up, 3 down, or 3 down, 3 up, 5 down. That's our A wave. And within our corrections, we have A, B, C. So we have the A down, the B up, and the C down. And so we'll take fibs from the top to the low, and actually let's go on to a bigger time frame because I'm not looking at this the right way. So go to the 5 and we bring it down to the low that we hit here, and within our B wave, typically we'll target like any of these levels here, anywhere from the 0.236 up to the 0.854, 0.5, 0.618 are most common, and then bam, we ticked right above the 0.5 here. So I see that as the B. So after the B was hit, we can anticipate one final leg down. And so we'll measure the length of the A, bring it up to the B, and we're looking for 100 or 100, or we're looking for a 1-to-1 or a 1.618 to 1. And so visualize, you'll have the 1-to-1 in yellow and the 1.618 in purple. And you look here, 1.618 hit, wick below a bit, and then started to recover. And if we look on an hourly time frame, I think we didn't even close below. Yeah, see, we wicked down, but the hourly closed above, and that was a bullish signal. So I don't want to jinx it, but this is like super exciting to see that this is a wave 2 target right here, and it appears to be the low. And you heard me say time and time again, wave 3 is the strongest, yada yada yada. So from here, expecting a move, wave 3 ideally 1.618 to 1 is what usually happens. So 191 would be the target we'd expect from there. But again, fractal is kind of confusing. So that 3, 4, 5, let's say that 5 wave impulse, after 191, then down to like 180, 178, whatever, up to like 208, that would just be a wave 1 right there. Not going to dig too deep into like what's going to happen on like an intraday scale. I don't care. I don't really think anyone really does. I think that this low right here that we just had on Thursday, I think, is the equivalent to this low right here. And I was looking at it before. You could argue that it's equivalent to this low here as well. It's hard to say. The candle structure, like the candle similarities, aren't really there as much as I would like them to. Let's go to a basic view. Right, it's hard to say. I was expecting, we'd have a move up like this followed by a bit of consolidation. You could argue this is like a flag pattern here, because in this cycle we had a really strong move up in February, then sideways for a few days, and boom, we took off. Here in May, move up, consolidated for a few days, boring nothing, then boom, explode. So I was expecting, we'd move up to here, sideways, and then take off, but obviously that's not what's happened. But still, move up, move down, but the move down is higher than the previous move up, or than the previous low, sorry. So, it would probably look from here, something kind of like move up, down, and then up. This would be the one. And I've said before, my 288 target, that comes from, if we, I'm just going to do it on here so you can see how I come up with it. So we'll measure this whole wave here, your 1, bring it down to the low, and then your 0.618 within. So because remember, this is all a big wave 3 that we're anticipating right here. This whole move up, 1, 2, 3, 4, 5, just a 1 within that wave 3. And within a wave 3, if it's typical, it's pretty common, we'll see the 0.618 level hit for the wave 1, measuring the larger wave 1 down to 2. Probably doesn't make sense, but you'll see that target does coincide with this gap down we have right here. And so we'll illustrate that with a little box, so yeah, this would be like what I'm looking for to, it doesn't really mean anything, and then obviously after that hits, we can reevaluate and draw more targets, but that's the first big level I'm looking for. I think to sum it up, basically, I am very, very excited because, going back to the drawing here, 1, 2, 1, 2, 1, 2, and then explode. But then we look on a bigger scale, 1, 2, 1, 2, 1, 2, 1, 2, 3, 3, 3 of 3 of 3 of 3, yada, 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 explode. So we'll see. That's what I expect. Not necessarily this week. I do expect this week will be green. Now that I'm saying it, it'll probably be red. Just kidding. But yeah. Quickly, let's touch on SPY before I cut this off. I've probably veered off track. Again, with SPY, there are a bunch of different ways to interpret this as well. I'm just going to look on like a much smaller scale. First of all, if we look, let's go on a 4-hour first. You can see like the count that I have going on here. So we had a 3 here, 4 down. This is this wave 5 in red, this degree. I expect this to be, like the final leg up, the last hurrah. And so if we're subdividing this wave 5, over 1, 2, and 3 up to here, and this purple is subdividing this white degree. So 1, 2, 3, 4, and you can see the 4 bottoms above the high of the 1. So the count is valid, and then up to here, 5. That makes your 3, ABC down, 4, 1, 2, 3, 4. Wave 4s are usually like elongated, boring, sideways. That makes the most sense here. And 5, we go up. And then again, wave 5 targets. Typically, if you measure the length of wave 1 to 3 down to 4, you're looking for 0.618 to 0.786. And so visualizing this count in purple, you can see that we measured up to the high of 3 down to low of 4, and you'll see highlighted right where all my 5s are, the green 0.618 level is lighting up whenever I hover over it. So this was like the area to reject. We did top a little bit below it, just barely by 50 cents. Negligible difference, but close enough. But then you look at the other targets I have. So you have we're gonna look at the red degree now. Your 1, 2, 3, 4. Again, we'll measure from the low of 1 up to 3 down to 4, and you'll see the 0.618 and 0.786. 0.618 was actually the top of our 3 within that degree, and that's also pretty common too. So you'll see right here, we rejected here. This was the top of our 3, right? And then ABC down. This was our really sharp move when people thought the market was crashing because this was the market has a case of the Mondays, right? But looking at the structure, I was like, yeah, I see more upside. I thought that was a 3, based on the count that I had going on. And so far it's proven to be right. This count has actually been more or less spot on. So I'm excited to see how it plays out. Yeah, no one knows for sure. We can look at the option statistics and see what people, big money was betting on what's going to happen. Looking at our PC ratio, we did have more puts than calls traded. But the statistic here, it's kind of it's iffy. You can't really draw any sharp conclusions from it. 2 million calls, 2.7 million puts. 39% of the calls were shorted, 48% of the puts were shorted. It's hard to say. But then what I also like to do is I'll look at the inverse leverages, at the inverse leverage ETFs, right? And then looking at here, you can't really do TA on this type of stuff, but I like to try anyways. Look for significant retraces. Broke below the 0.618. Possible we come down and fill the gap here. Doesn't really matter. This is SPXS, so it moves inverse the market. 3 times leverage. The market's been going up, insane bull run, so this has been getting absolutely killed. Obviously, when the market starts to explode, this is what happened during COVID. This is the correction in 2019. So hard to say, but we'll look at the statistics for this one, and this is where it gets kind of interesting. A PC ratio of 0.05, 15, borderline 16,000 calls traded, and only 800 puts. So when people trade this index, ideally they're in and out just because the market moves up 1%. This comes down 3. You can see on Friday, minus 2.41% closed, and then SPY, I'm guessing it was 0.8. Yeah, 0.8%, see? And then again, we'll also look at UVXY volatility index. yeah, I can't really draw any sharp conclusions from this. We can look at the option times and sales, look for any big purchases. Set it to 10. Big put orders, big call orders. Yeah, kind of uncertain as of now. Can't really say anything for sure. Are futures trading yet, actually? Futures are open right now. Yeah, it's hard to say. We're kind of in no man's land, like at this moment. You know, if we're looking, trying to anticipate where this C wave will end, I guess you could. No, but that's the thing. It's hard to say, man. I don't know. Ideally, we would have rejected right here at the 1-to-1 level. These are all possibilities, but if this is a new trend, we should not break above this previous high here. So another way to look at this is, you know, you could say A, B, C down, and we're starting a 1, 2, 3, 4, 5 back up to finish the cycle. I don't know. Hard to say. But I mean, yeah, that more or less sums up what I wanted to talk about. This is probably all over the place. I'm sorry if you got lost. I even got lost talking about it. But that's where I think we're headed with GameStop, at least. SPY, the general market, it's, you know, hard to say. I mean, I do hold my bearish view, but, you know, we just have to see what happens in the coming few days. Because, yeah, I mean, you could argue 1, 2, 3, 4, 5, 1, 2, 3 up, but, you know, we can't tell yet. We really don't know. If we do keep going up, and this was just, you know, you could argue 1, 2 here, 3, 4. I guess you could argue diagonal, ending diagonal, in which case, you know, we'd finish. We'll draw it like that, in which case we should not break above this trend line, and we would top somewhere around here. You know, we'll see. You know, the end is near. Doesn't really matter. I just like to look at the indexes as sort of like a precursor for what's going to happen market-wise. Yeah, that about sums it up. Sorry if it was all over the place. Just wanted to share my thoughts. I think by like watching this video and hearing me talk, you can kind of see like where my head's at when I'm like writing my DD or like posting my analysis. Like it's a mess. There's so much stuff to talk about, and I'm sure I missed a lot in this analysis too, but we'll touch back. Actually, before I end it, let's just look at basic technicals. Oh, look at that. My algo just gave me the buy signal on a 4-hour. MACD is about to cross. TTM squeeze showing bullish momentum coming back. And we look at the weekly. The weekly has been squeezing for, what is it, 6-7 weeks. So as soon as this goes green, you know, that's the squeeze firing off, quote unquote. But time will tell. Technicals or like indicators, it's like subjunctive or not subjunctive, in tandem with my Elliott wave analysis, but not a primary form of analysis for me. It doesn't really work for me. But I mean, yeah, that about sums up what I wanted to talk about, I think. Cool. Sorry if you got lost. I'm lost too. But Jack for the week. Let's get it. Don't buy options. Peace.